Welcome back all to Tech Tune Up with me, Paul Meeks. Today's June 24, 2025, if you're keeping a calendar. As you know, we get together weekly for about 30 minutes, give or take, and we talk about the tech news of the day and how it may impact more broadly than the individual tech companies. I also share my tech buy list and stocks that I have in the bullpen that I'm watching to potentially buy at either a lower price or with some sort of catalyst that I'm waiting for. And then we spend some time on tech trends. So notice that my background, which is virtual for this particular program, is different. I will talk about some day job changes that I've made, which could actually richly benefit this program. That's what I expect. Because there is no way, if you ever knew me personally, that I would have a piano in my background. I played college football and college lacrosse, and when I played lacrosse, I was unfortunately too many minutes in the penalty box. Yes, I have never touched a piano. So let's get to the stock news of the day. Again, we're always looking for ripple effects. AMD, after being in the doghouse for a while, is starting to break out technically. It has caught my eye. And they have had some interesting announcements as of late. They signed a chips deal with Microsoft for the chips to be in the Xbox game console. They also are getting some traction in AI-oriented GPUs. And so, yes, this stock has come on my screen. Yes, I have bought some, but I will tell you this. If you are going to bet on AI GPUs like I have done, and I will continue to do, I still, even after the newfound excitement AMD, I still put most of my money in this particular bet on Nvidia. Here's an interesting thing. AMD, on a price to earnings ratio basis, is actually now more expensive than Nvidia. So why would you have number two when you could have number one with a better growth rate, better prospects at a even better valuation? So that's AMD, Nvidia. You know where I stand. Meta has really made a aggressive push to really build out their AI team and AI capabilities. You know that they've spent $14 billion on Scale AI, and Scale AI is a firm that I don't know offers that much except for their personnel. And so they are spending a lot of money for some very expensive, hopefully they're super productive and super successful AI engineers. As I've told you, we've been doing this show for a year or two. In tech particularly, I believe in the 80-20 rule. When it comes to all these emerging technologies, yes, I'm always spending 20% of my time looking for that needle in the haystack, looking for Meta or Alphabet or Amazon in the 1990s and early 2000s. However, 80% of the time, because in tech, strong gets stronger, they have the bigger resources to fund R&D and to even acquire interesting technologies before these companies go public. They're always going to be the better bet. Always going to be the better bet. So remember, in tech particularly, the strong get stronger, the 80-20 rule. Amazon is also spending like a drunken sailor on building out their AI infrastructure. You may have noticed that they signed a deal with the UK. So over the next 3 years, they're going to spend 40 billion euros or 46 billion US dollars on AI infrastructure in that particular country. Of course, we're quoting euros, but the UK is on the pound or return to the pound. I'm pretty interested in tomorrow night's quarterly report from Micron. Micron is a company that I've long talked about on this program. It's had a big move, and so they better deliver some results and guidance tomorrow to warrant that move. Of course, as you may recall, this is a memory chip company, which is a commodity. But high bandwidth memory, or HBM, is absolutely essential in AI servers and other AI products. And so we'll see what's happening here. But obviously, at long last, because this company was poo-pooed for quite a while, they are getting some AI love. But man, with this stock and the tear it's been on, they better meet or beat and make everybody feel even better tomorrow, or their stock will probably have at least a short-term hiccup. I'm getting a lot of questions about stablecoin. No surprise. One of the biggest IPOs recently was Circle, which has the USDC stablecoin. And Coinbase is also in the space. Actually, ever since 2018, those two companies have been in cahoots. I will tell you, yes, I believe in stablecoin, but I think that these stocks have come too far too fast. And I would tell you, if you are going to invest in one and ignore my advice, maybe on a pullback, you go with Coinbase over Circle. Circle just way too expensive. And remember, the revenue from these companies comes from the interest that they earn on their reserve assets that back up the stablecoin. And their reserve assets are US Treasury bills. So they have a big portfolio of US Treasury bills, and you can look them up. Right now, you could probably earn 4 to 5%. But if that is it, these are never going to be very profitable business models. So their treasury reserves will grow with the acceptance of stablecoin. But this ain't a high margin business. This is managing a portfolio of very sleepy US Treasury bonds. Next, Tesla, always in the news, always love to make fun of them. They finally started their autonomous vehicle test in Austin, Texas. And we'll see how it goes. In the meantime, regardless of the friction between China and the United States over the trade deal, and remember, unless we get some trade deals by July 9th, which is fast approaching, these tariffs are going to go into effect unless Trump changes his mind again. But Tesla needs to continue to kiss the ass of the Chinese because it depends on that market to sell their EVs, and it also, of course, builds them in Shanghai. Now, they had just announced that they are going to build a grid scale, so institutional grade battery plant in China. Again, this is important for them to ingratiate themselves with the Chinese government, so they still have a play there, regardless of what happens in the Trump trade talks. So next, Fiserv. This is a company you've never heard me talk about. This is a fintech. And another reason that you probably have to be wary about betting the ranch on Circle or Coinbase in stablecoin, here is a fintech company. It's got a long track record. It's been around for 35 years. It has over 10,000 financial institutions as customers, so a very broad reach. They are going to introduce a stablecoin, and their shtick is that their stablecoin will be bank friendly. And as I reported last week, Walmart and Amazon, the two behemoths in e-commerce and physical commerce in the United States, are also looking at their own stable coins. So believe you me, there will be a lot of stable coins. And like any industry, what happens when there's more competition, particularly if it doesn't appear to be, at least structurally, a very profitable business model. I love to track my AI use cases, right, to make sure that sticking with this bet is the right thing to do. I noticed today that there's a company called AdBridge, privately held company, but it just got a $5 billion private valuation, which is very steep for a company that has AI that takes notes for doctors. Also, and I almost laughed at this, Applebee's and International Health Pancakes have decided to go in a big way on AI. So does AI escape you? No, not when Applebee's and IHOP are getting after it like a pack of wild dogs. Interesting. We'll see what happens. The other thing is there was a positive negative announcement from Amazon CEO Andy Jassy. He wrote a nice essay. It was supposed to be for internal use, but he knows that when he writes something, it's going to be leaked everywhere. So that was probably his original intent. But he talked about Amazon already using AI in 1,000 cases internally. That's the good part, right? That verifies my thesis on building all this AI infrastructure, whether it be hardware or semiconductors. But he also said, and this is a warning, that even Amazon's workforce is going to be drastically cut as they have more and more AI efficiencies within their organization. So he's essentially telling his employees, jump on the bandwagon, get retrained, go back to school, whatever you have to do. If you're not in AI, you probably will lose your job over time at Amazon. And if Amazon's doing that, everybody else would be doing that too. So a kind of a good news, bad news scenario. The president, again, another 90-day delay on this U.S. TikTok potential deal. You remember long ago, the legislation was passed under the Biden administration that unless TikTok divested its U.S. operations, they were going to be shut down in our country. Now, why is TikTok important? Well, we have about 340 million Americans, but 170 million of them are on TikTok, even though it's a Chinese-based company. And a bunch of them also earned their living as TikTok contributors. So this is somebody's business. Not somebody, but a lot of people. And so in the meantime, they kicked the can down the road. I think this is the second or third 90-day extension. What I think is going on here is Trump is trying to come up with a bundle, right, with a negotiation with the Chinese. Not only will they decide on tariffs, they will decide on how many Chinese can go to college in the United States. They will decide on, can U.S. semiconductor companies like Nvidia ship their AI chips to China? And as part of this bundle, they will probably decide on the U.S. ownership or the U.S. partnership with TikTok as we go through yet another delay. Anyway, this is all, just we have Trump's big, beautiful bill. This is the big, beautiful bundle, which I think is coming. I don't know when it's going to come. Remember, these tariff deals are supposed to go into effect on July 9th. And we're getting very close to that. We're supposed to be negotiating with well over 100 companies. And I think as of yet, we only have a tariff deal with the UK. So obviously, very slow progress, makes me super doubtful. I got a pretty negative vibe from Microsoft. Microsoft has been aggressively, they did it last year, and now they just announced a new one, cutting employees. Tech companies have to grow. I admire companies that are being efficient, and maybe over time, particularly for rote tasks, you don't need all your employees because AI can do it better. But Microsoft's job cuts, and more have just been announced, have been significant. That is a red flag. Another red flag is, you may not follow as closely as I do, a company called Accenture, which is one of the largest IT consulting firms in the world. Think about it. You're a company. You may hire them to create an AI strategy and then implement it within your company. Well, Accenture has feelers out all over the world with a lot of such customers. And their bookings, which is their order rate for future quarters when they announced their quarter last week, was really down. And so even though the near term looked good, the outlook looks pretty bad because their order rates were much, much less. I believe a 6% decline. And that really surprised the street. So next we have our buddies over at Alphabet. Alphabet now is in the crosshairs, like they could use any more regulatory heat. But now they're getting some pushback from creators who are pissed off because Alphabet has been trading their large language model with their YouTube videos, unbeknownst to the creators. So anyway, I think at some point in the age of AI, we're going to have some kind of agreement, some guardrails on how we handle contents and intellectual property, because these companies just can't scrape the internet and steal and replicate intellectual property and call it their own. So at some point, I hope we get around to it in the halls of Congress, because one of the things that's always disappointed me is we are still running the internet, at least on a US regulatory basis, based on laws that were passed in 1996 when the internet was just rolling out. Of course, those regulations, totally outdated, totally useless. This is kind of interesting. Next, the big Japanese company SoftBank has really made a play in the United States. You may recall soon after Trump was inaugurated that it was going to go in cahoots with OpenAI and Oracle on a big AI Stargate project. But now it looks like it's going to partner with Taiwan Semiconductor to build essentially a AI city. They're talking about over time, $1 trillion investment in the Phoenix, Arizona area. So this is kind of interesting. Yes, we will continue to build out AI, and we will onshore AI. That's fantastic, right? We need to do that so we keep our lead, particularly versus the Chinese. But on the other hand, think about it. This massive data center complex. Yes, Phoenix, Arizona, great. Japanese and Taiwanese company. No American company in the mix. So I think that's super interesting. So next, I just wanted to talk about something that I thought was pretty funny. Pope Leo, we have the first U.S. Pope. I was raised Catholic, but to get married in 1987, I had to become an Episcopalian, and I was happy to do that. But anyway, you may have read that Pope Leo's signature issue is privacy on AI. Signature issue, privacy on AI. And there are 1.4 billion Catholics in the world out of about a population of 8 billion for the total world. So there are a lot of people watching and listening to Pope Leo. And now they're into AI. I think it's actually pretty funny. Next, this is interesting. SpaceX Starship had a test run and the rocket blew up. You may have heard me say this before, that what comes to Elon Musk, and sometimes I criticize him here, I'm not interested in Tesla. I think Tesla is egregiously overvalued, autonomous robo-taxis or not. The key value in his enterprise is SpaceX, which is right now a private company, but it'll be a monster IPO at some point. But you have to watch this very carefully because obviously the blow up on the rocket pad is a big negative. I am very into SpaceX. I'm not that into, at least as a long investor, Tesla. So let's move on to my tech picks. I got a couple of changes this week. As always, we have in green my fresh money buys, in yellow stocks that I am holding for either a better price or a fundamental catalyst. Now, it wouldn't be on the hold list if I saw no fundamental catalyst, but I'm waiting for certain things fundamentally to happen before I move on. But I will tell you, this list, you wouldn't expect it to change much, and it hasn't. But if you take a look, at least at the bottom of this particular graphic, I have been screening for some defensive ideas. And some of these are not tech companies, right? Because you can't be all tech all the time, particularly if tech stocks are getting a little expensive in price. And I think we're there, and then potentially some. But take a look at some defensive plays I've done well with. SFM, that's Sprouts Farmers Market. You might have one in your community. I like it very much. And today the stock is down 4%, so it's a buying up. I also like Tapestry. You would think in a impending recession, like I think we're still going to have a recession in the United States, though I've said before, I don't think it's going to be long or very deep. Why would you buy a consumer discretionary name if we have a recession? Because consumers will cut back their spending. And if you know Tapestry, its key brands are Kate Spade and Coach. These are not inexpensive items. But I will tell you, in all of retail, despite that, I am most interested in Tapestry, TPR. I will also tell you that, stay tuned. You have my stocks here. I think going forward, because this list I can easily send to you, or you can easily download it from a variety of sources, including directly from Benzinga. Maybe we start doing that. I want to spend less on this, particularly if there are not many changes, and more on the tech trends, which comes up next. Now, before I do that, again, I'm always asked about stablecoin, particularly recently. My vote is if you own either Circle or Coinbase, hold them. Just let them keep riding, even though they both are egregiously valued. If there is any dip for any reason in either of the two names and you want to get into stablecoin, I would prefer Coinbase over Circle. So next, let's get into some tech trends. Well, we had the Federal Reserve Board do nothing, as we talked about here in this program and we previewed. And the interesting thing I thought about, Chairman Jay Powell and company still have in their plan a 2.25% Fed funds rate cuts between now and December 31. The other thing I will tell you is Jay Powell, who Trump hates, his job is over. He will not be re-upped by the president, and his job will be over on May of 26, so about a year from now. Some of the Fed governors, now there are 19 voting members on the Federal Open Market Committee, which essentially is the voting body of the Federal Reserve Board, the U.S. central bank in charge of monetary policy since 1913. A couple of them obviously are campaigning with the president, at least indirectly, for that job of becoming chair when Powell steps down in May of 26. So you do have a couple of Fed governors giving speeches as recently as this week, and they're putting out there that maybe there is a 1/4 point cut in the cards at the next meeting, which will be at the end of July. I don't think so. I think we're going to have to get further out, but think about it. There is some tension, and it's because some of these ass kissers want to get in Trump's good graces. So they're seen as supportive of lowering rates more than the current chairman, because they would like his job. And to please, all presidents want lower rates when they're in the White House, of course. But we'll see what happens. But anyway, it's a little bit of mix. It's a little bit of intrigue. Kind of a soap opera over there. Gotta love it. I'm going to be following quantum computing more carefully. Let me tell you this, because it is going to be something that you'll see in our next show next Tuesday. I have signed a deal with a company called Water Tower Research, a really good institutional caliber firm. And for them, I am going to be publishing research on public and private quantum computing companies, because I do think it's going to be the next big thing. And I want to be the quantum guy. And so stay tuned for that. But as it pertains to Water Tower Research, what I think we'll do with the program, unless you're opposed, just easily reach out with your comments. Heavy on the news, heavy on the trends, lighter because I can easily send it to you directly on the buy and hold list. And when it comes to the trends, I will sometimes handle that discussion. We're going to focus on fewer trends, maybe even one per episode. And I will bring some tech gurus, other analysts at Water Tower Research, and I will ask them to give us their spiel on their super hot areas. and I will interview them like an anchor. I've done that before. So anyway, stay tuned. We are going to have next week a really good tech analyst from Water Tower Research. His name is John Roy, R-O-Y. Look him up. A stud, and he'll have a lot to say. So with that, before we get into the questions, I promised somebody, hopefully you're on the line today, that I would follow up on a company that I knew too little about last week to comment when you asked me about it in the Q&A session. That company is Centrus Energy, ticker LEU. I would tell you this. I very much like, and you saw announced, I believe, on the 20th, that they have the contract extension to build a uranium store for the U.S. government, $110 million contract extension for a year, right? 25 to 26. That is great. And that gives you nice visibility to revenues, because that would be a quarter of the revenues that Wall Street is expecting for next fiscal year. But here's the thing I don't like about the stock, even though it's running up and has a lot of momentum. So even with that revenue add, the revenues are going to grow 12% next year, according to the street. But their earnings per share are going to be flat, no growth. And so I'm wondering if this company has what I call a profitless prosperity model. Particularly when you're working for the government, they are going to squeeze you on price. But I need to see, or I would prefer to see, earnings and cash flow grow even faster than revenue growth. And so particularly with the move that the stock has had, I think it's too expensive. I don't recommend that you sell it. Continue to ride the wave post this U.S. government contract extension. Now I would probably ignore the fundamentals and look for a chance to sell it on a spike. But if you don't own the stock and you're sniffing around the stock, I would wait to buy it lower. Just really worried that we have not rapid growth, but solid growth, but it does not come through with earnings growth. Is this a profitless prosperity model? Lots of revenue, lots of announcements, lots of excitement, but no increase in what really matters, cash flow. So now let's get to any of your questions for today. Could you cover Chipotle at some point? Up and comer from the West Coast. Yeah, I would say, I don't know if it's a up and comer, but yeah, I've covered the company. I actually took advantage of it years ago, because I'm not just a tech investor. Remember when they had the food poisoning incident, right? The stock went down about 50%. Then I must give credit to the founder and prior CEO. He fired himself. And he brought in from Taco Bell the guy that turned the company around, and he did such a good job with Chipotle. He was hired to be the CEO of Starbucks and turn that one around. So yes, I will follow the company. It's not my day-to-day routine to do so, but yeah. As you saw today, I had a recommendation for you in Sprouts Farmers Market. That's about as far away from building semiconductors as you can get. But anyway, thank you. I know a little bit about the company. Maybe I'll get back to it. If I do, I'll let you know. Uber. Izzy's asking about Uber. I own Uber. I'm tempted to buy some more. I wanted to see how much fallout there would be when Tesla started its autonomous robo-taxi deal in Austin, Texas. And so far, I don't give a shit. I think Tesla is running around a small geo-fenced area within Austin, Texas, with 10 to 20 robo-taxis. Okay, I don't think it's going to impact anybody anytime soon. And Alphabet's Waymo is way ahead. I think what happens with Uber over time, I'm not buying it now, I will buy some more on a dip if that happens, is I think they have such a great database. And despite the fact that Elon Musk, and he said this in an interview just about a week ago, does not need Uber because Tesla could easily develop its own app, I think that's a bit naive. I think over time, Tesla will do a deal with Uber, probably will do a deal with Lyft, just like Waymo has. So anyway, I do think there's a lot of opportunity in Uber. It's a well-run company. Let's see what happens. If there is any negative impact on Tesla's promotion of this kind of dicey deal in Austin, Texas, probably a buying opportunity for Uber. I like it long term. What are your thoughts on Visa and Mastercard? I think, I'm a contrarian investor, and that's the only way you make dough. I think it's probably a buying opportunity or close to a buying opportunity in those two names. I think that Visa and Mastercard and the other card issuers, they will be somewhat disintermediated by stablecoin, but they will probably find ways to partner with various stablecoin companies. And so they'll still benefit. But you think about it, they had essentially a oligopoly. Maybe that deteriorates some bit, but I think in the meantime, the fact that Circle and Coinbase are trading at their valuations, and these behemoths that are not going to go away, Visa and MasterCard, are trading at much smaller valuations, it's probably a better opportunity if a contrarian investor to short those expensive stocks, the pure plays, and buy Visa and MasterCard. Their businesses will be diminished, but they will still be probably good investments long term. Why have the defense names been hammered so hard? Yeah, I told you last time. It looks like you might have asked this before because I see the same stock tickers. I own the old Raytheon RTX. I think what's happened is typically in wartime, you would expect these stocks to do quite well. But it looks like in Iran that both Israel and the U.S. have and maybe will drop some bombs and then go home once they feel that Iran's nuclear stores have been crushed. And if that's the case, the people that actually benefit from a longer lasting conflict are your defense contractors. And so maybe the fact that at least some people are thinking that this could be a one and done, maybe they're starting to sell the stocks off. But anyway, it doesn't look like either side, the U.S. or Israel, is going to put boots on the ground. And, that's probably a good thing for America. But you can also see that, last Saturday night, when I saw that Trump dropped bombs on Iran, I thought, oh my God, the stock market's going to be down a lot on Monday. And you know what? It wasn't. And then it rose again today. So I think people are shaking this off because they think it's going to be short, controlled conflict. So probably is negatively impacting those defense contractors. Thoughts on Marvel? In the building of purpose-built ASICs, so custom designed ASICs for AI GPUs for the likes of Amazon and Alphabet, I prefer in this space Broadcom. I think they got more game, more irons in the fire than Marvell. I admire both companies. As you know, in the past, both companies have been on my list. But right now, I'm focused on that particular bet on Broadcom AVGO. APP is pulling back a lot. Why? Attacked by shorts. Yeah, you guys know. I've made no qualms about it. This is my favorite tech stock. But right now, I have my technical hat on. Even though the stock has come back in the last 2 days, I don't like it technically, and I stay away from those situations no matter how strongly I feel about fundamentals. So the latest short attack, and that's what it's all about, was a report that was published on Seeking Alpha. And I read the report. There wasn't anything compelling there. Seeking Alpha is a platform where a lot of the short sellers hang out. And you don't think that they talk about each other and say, okay, I'm going to write a negative report on app on Tuesday, you follow them on Wednesday, and then you follow on Thursday. So I think these guys are in cahoots. In the meantime, I'm not necessarily worried about valuation, which is essentially the call. I'm also not worried, as another short seller said this past week, that the company is really controlled by the Chinese government through some shell companies. Dude, look at the proxy statement. follow up with the SEC. It's pretty easy to track who are the largest shareholders. I would be surprised if this is a Chinese government conspiracy. It's a bunch of bullshit. So in the meantime, I will buy more. I will go against the shorts. I've done that before and I've done quite well this stock. I really like the fundamentals here. And in the meantime, I am not going to buy it until I see technical support. So it would be supporting a K moving average price like the 50-day or the 200-day. And it would trough there, show no further weakness, regardless of what the broader market does over at least a couple sessions. And at the lower price, the trading volume would dry up, right? So there's no more action, there's no more pressure. And it's pretty easy to see the daily trading volume on a stock because that's printed every day and you can compare it with the average over the last month. So I'm looking for a well below average trading volume day. Those are my technical indicators. And I can't guarantee you anything, but I'm likely to buy app when all that lines up. So you guys, thank you for your questions. We had a good session today. I will see you next week. And remember, next week, we're going to get into a more focused discussion on trends. And I'm going to bring in from Water Tower Research, John Roy. In the meantime, before next week, it is your responsibility to Google him and see what you have coming, because maybe you'll ask him some questions too. In the meantime, thanks, guys, and I will see you next week.